Hey, welcome to the show today. This is Sandra Johnson, and I'm joined by Danielle Johnson and Don Geisler, actually both from Indie Realty. So, welcome.
Hello, hello. Thanks for having me on.
Yeah, you may have noticed that Mr. Smith is not with us today. He's traveling, and so we do miss him. He actually sets the schedule of the show, and I got to the station before I realized that I didn't do that. So we are sort of flying by the seat of our pants, but we're gonna have a great show today. So I really wanted to start out talking a little bit about my favorite question for you, Don, is what are you seeing in the market?
Well, I think we've seen it be pretty consistent with the last couple months, and so the discussion is a little bit the same. That we did an analysis, and we were down pretty significantly in closed units from 2020 and 2021. But I can tell you that those were what I consider to be superheated, overheated, overcharged years. And right now, for our last stats, we were trending less than 5% down in units compared to the same month last year, which is real positive. So I feel like, trying to compare us to 2020 and 2021 is a little dangerous because they were just so overheated.
They were.
So I feel like we've got a little bit of a normal market from velocity standpoint going on. Not that for some people that's comforting. For some people it's scary. There are some people that haven't ever experienced what a quote unquote normal market, feels like, and what it takes to buy and sell and operate. But overall, we have lots of buyers, we have lots of sellers, and they're all interested. We are showing lots of property. We're still, if the property is desirable and priced appropriately, we're still seeing multiple offers. We're still seeing some competition. There's lots of good stuff going on out there. So, as always, I say, keep your head down, tune out the noise, and do what we do and live your life.
Yeah.
I think it's important.
I think you bring in a really good point, too, of just remembering that when we're looking at what the market has done in the last couple months, we're kind of missing the big picture of just how abnormal things have been in recent years. And that if you have just been in the market just for a short time, you're just starting to look, that, things have been a little bit weird, but they're stabilizing right now. Things are pretty settled down, and this is what we're expecting for a little bit.
I would agree with that, is that I think stable is a pretty good word for where the market's at right now. I mean, granted, prices are up, affordability is down a little bit because prices are up and interest rates are up a little bit, but there's lots of creativity and there's lots of movement, going on with that stuff. And I don't know if we've talked about this before, but I would have to try to remember how long it has been since we've been in an actual quote unquote normal market, which is, 2006, 5, 6, they were massively overheated. Massively. It was very similar to how it was the last couple of years. And when everything crashed in 2007, the crash, right? Lots of steps were taken to help the economy get out of it. So we started off with tax credits, right, to incentivize people to still buy houses, right? And then it moved into even more lucrative tax credits. So our normal cyclical, especially the annual cycles, where we would say August is going to slow down a little bit, then November, December is going to slow down a little bit. I mean, everything was blown. It was all superheated, all superheated all the time, right? And so then when the tax credits ended and stuff like that, then things slowed down a little bit, much like now, took a little breath, and then they ramp up again. And then we went through a down cycle, and, there's just been so many different kind of artificial influences on the market that maybe I don't even know what quote unquote normal is myself. And I'm, 23 years into this thing. So it's just interesting, but there's not panic.
Maybe you haven't been here when we've explained what normal is. Normal is a setting on the dryer.
That's it.
And that's it.
Nothing else.
That is all you get.
There is
now,
no normal.
I think in real estate, we can talk about balanced.
Yes.
But even balanced doesn't necessarily equate to normal, you know?
It doesn't. And I can tell you, balanced in our definition of what balanced is, which is, approximately 6 months of inventory. That means not a buyer's market, not a seller's market. We haven't been there forever. Like we've been in 4 months of inventory, 3 months, 2 months, 1 month for years on end, literally.
I'm in real estate. I should know the number, but I'm gonna say maybe 9 years, and I don't know that I've ever seen a balanced market.
But
in
you probably
9
haven't.
years.
I
don't
would
think
say,
so.
and people didn't realize this, but when everything happened, when the news media picks up anything and they run with real estate this, real estate that, we in the Tucson market have been pretty firmly in a seller's market. Yeah, for as long as I can remember, which does certainly go back your 9 years.
Yeah. One of the things that is impacting us a little bit right now would be the interest rates. And we didn't get good news. We've been expecting the interest rates to come down a little bit, and we haven't had good news on that front. And I know we had a lender in speaking in our office meeting this week, and he's saying we're looking at like a year of the Fed's kind of wanting to hold in the position that we're at now.
Yeah, that's what I'm seeing and hearing. That's what I mostly expect. So I'm not a lender, so we'll just put that right out there. I'm
Right.
not quoting interest rates. I know a lot of people are quoting about 7.5% right now as a sort of a par rate. And the fact is that they just are what they are. And I mean, the good thing is that that's still really affordable.
Do you remember did you ever refinance into a 7.5% loan and
I-
think that you hit the
Yeah.
lottery?
Yeah.
Like, you won't believe you'd call your friends. You won't believe what rate I just got on
Right.
my refi. It's
Yeah.
only at 7.5%. It was such a great, I remember feeling so elated that I was out of my 10.5%
Right.
interest rate down to 7.5.
It's important to keep everything in perspective. And so it makes investing in real estate, whether it's for a home or for investment purposes, it makes it a really safe move, all the time. And the thing about the rates is, I mean, most fundamentally, if you're renting, you're not getting any equity in anything. So it can be said you're paying 100% interest if you're renting. And so you kind of can't go wrong, because if you come in and you get a 7% interest rate, if they go down, then you can refinance down. And if they go up, well, congratulations, because you got it at the 7.5, right?
Right.
So there's kind of, if you're in the market because you want a home, then there's kind of like never a quote bad time.
Sure.
And we're very creative with what we do, with how we help people structure their financing with our lenders, and a lot of sellers are offering incentives that help with the interest rate and stuff. So I would encourage everybody to not be, don't be paralyzed by interest rates, because it's very temporary.
Yes. Well, we will be back in just a few minutes. You are listening to the I Am Real Estate Show, and our guest today is Don Geisler, the owner of Indie Realty, and we'll be back in just a few minutes.